Happy Monday, everybody. Welcome to the TraderMerlin Show. Off to a little bit of a rough start for our equity market indexes out there. And yes, hello, everybody. I see Tom saying moon was so July 1969. A little bit before my time, but yes, you're right. Maybe we should be talking about the moon is the first stop, and who knows, maybe the markets will go to Mars. We'll have to talk with Jeff about that as we progress through today. We are doing, obviously, a live show. We'll talk about the markets kind of going to the moon as the general topic here. If you do have specific questions for us as we progress, let us know. Send those on in chat. If you do it in the chat, make sure you put question marks before so I can scroll through and find out exactly what is specifically targeted to Jeff and myself. And that should pretty much do it. So without further ado, let's get things started. We've got Mr. Jeff Manson joining us from an undisclosed location, but it's a fancy looking one at that. How you doing, Jeff?
I'm doing really good.
Good to have you back with us.
Well, thanks for having me. You know, it's been a few weeks since I've been on, and you know, there's just so many things going on out there in the market condition. Now, today I think we broke new highs again on the equity indexes, right?
Briefly.
Yeah, briefly. I was hoping we get a nice spurt to the upside, but
yeah. Well, you know,
you've
been. Yeah, you know, the S&P, for those that were following, we had a slightly higher high than we did on the previous trading session. But yeah, for most of these market indexes, things a little bit south, especially with Russell 2000 today. I actually sold some puts today on Russell 2000, which was good. It's always nice collecting a little bit of premium there. But let's go to the topic du jour, Jeff, which is this market's going to the moon. And for a while now, actually, I think in August was your maiden voyage on this show, I believe. It may have been sooner than that, but you were talking about these markets doubling, and I'll go back and see what those numbers were. And I was just kind of dumbfounded, like, man, I mean, I see some bullish optimism, but you were just really going for it, and you still think you were going up. Now, I've got financial instability. I've got bond market bubbles, housing market bubbles. I have uncertain employment. I've got inflation numbers out there. So the grand scheme of things would be saying, gosh, it looks like the market's going to be headed down. And you're going, to the moon, Alice. What are we still headed there?
I think so. Yeah, I think we're going to start to see some accelerated push to the upside, especially on the S&P and some of the bigger companies that are coming out. And we need to start paying attention to some of the new tech that's coming out. And I'm not sure what all that new tech is, but this is almost the same playbook for the Y2K. It's just when you have COVID instead of the whole planet ending, you know, with the computers crashing and everything. So the stage is set. You know, they've already started plugging higher interest rates and stuff like that, and the Fed wants to get paid to try to slow down the market. But this thing is just getting ready to heat up, and I think there's going to be more and more of a push to the upside. And we can all see the players that are coming to town too. And it's exactly what was happening in Y2K when the markets were just starting to really start to climb after 1998, 99, as that ramped up into that area. And I think we're going to have an amazing run.
You know, there's a lot of argument out there for that, and I saw a couple articles over the weekend where some analysts were calling for the greatest market since the 1920s. That this isn't even the beginning of it. It just seemed like it's an infancy, because if we get back to full employment with all this crazy stimulus that happened, then we could see the mother of all melt-ups. And you know, obviously, I think that is absolutely a possibility. Of course, you know, we always have to weigh both sides of it. But what sort of things are you doing to position yourself forward? I know you could just answer it as simply as saying, I'm buying the markets. But, I mean, are there specific tactics? Are there specific markets you're looking over others?
Well, it's broad-based, you know, and I'm really trying to pick up on where a lot of these markets are moving, not just markets in general, but, you know, like real estate. Okay, when was the best time in Y2K to sell real estate? Mm-hmm. Yeah. And then when was the best time to buy it after the correction? Okay, so, you know, there's a lot of things in the socioeconomics as well that I'm watching for. I think there's going to be some bigger plays in the food industry and some of the new things that are coming out. You remember Bailey, my oldest son?
Yeah, absolutely.
Yeah, I was just with him over in California this weekend for my grandson's birthday, and Bailey's talking about this company called Oatly out of Sweden, and they're basically trying to replace a lot of the milk products with the way that they've made make like this oat milk, and I guess it's really good. And it's getting, I think they've got like $200 million that they're raising, and they've already got a lot of it, and they're getting ready to be listed here in the New York Stock Exchange here shortly. But some of those food products in that industry, I think, are going to be more in that direction. Maybe that's new tech on how we eat, how we put things together. But I think there's a lot of, like, your 3D printers, and that technology is really starting to take off. More telecommunications, infrastructure. I mean, once they start putting people back to work, I mean, they're going to need a lot of grunt labor. And, there's going to be a lot of people wanting to get some jobs, especially when the stimulus stuff runs out.
Yeah. It's interesting because remember, it didn't all start, but I think the major one that I remember is Beyond Meat, right? And obviously we have this an alternative to something that is one of the biggest gross polluters in the environment, which is cattle. That obviously brought in a lot of competition, and you're seeing now all of a sudden these alternative products in different spaces. There is actually a really funny video, I think was actually put out by almond growers. If you guys ever see the video on almond milk, it's hilarious. They actually have all these almonds lined up in like a stable, and they've got the little things for the cows and the udders, and they're just trying. He goes, "Boy, we don't get much milk out of each almond, but we sure give it the best shot we can." And it's anyway pretty damn good. But yeah, it is the big thing. Everyone seems to be. Tom just said it too. It's kind of like the new fad right now. You've got almond milk, soy milk, oat milk, hemp milk, and all of them providing different nutritional benefits. But I think what it does is it ushers in change and disruption to a system that was all just predominantly just milk. Right, we have alternatives. Some of these ones will probably disappear. Some will probably do rather well. But as we continue on this market melt up, this is something that I've noticed from my mentor years ago. He said you follow what everybody is into, and that could lead to the next big trends. At the time, it was Pokemon for him. But looking at alternative foods, right, alternative soybean kind of products and meat products, I think are going to be huge as well.
And I think that's where a lot of that tariff stuff started coming up, and also how Trump was starting to put some of those things together to really build that portion of it. And unfortunately, he didn't get to finish all of his what he was putting together. I think it would have been pretty good little plan, but things are still moving forward.
Yeah.
They're not going to stop. And if the new Green Deal comes into play, it's going to be huge worldwide. And I think U.S. markets, even with the stimulus we put out there, are really starting to showcase and say, hey, everybody in the world, come to the U.S. You can make money if you put money into our country.
Yeah.
And the billboards are out there. And then we saw Europe follow. Then we saw Australian follow. I mean, if you remember the Y2K, that was kind of in our prime. Well, that was in our early stages when we started seeing all those things come into play. And back then, we didn't quite understand how to go after it and just stay with it. And now we do. So,
yeah. All right, a couple questions from the viewers out there. Let's see. Boy, there's quite a few. I'll go to this one from Richard. He says, so Jeff, you view the fundamentals as an odds enhancer. How do you use the fibs with those? So I guess two things. Your usage of fundamental analysis, and then we could talk maybe about how you're utilizing Fibonacci's to give you expectations. Because obviously when we use the reference point, the moon, that doesn't give us any reference to distance. It just says it's somewhere up there. I'm sure that you probably have targets set up knowing you.
Yeah, I do. Using Fibonacci projections is a technical aspect, and technical is separate than fundamental, which a lot of us already know. But there's very specific and very minimal of the fundamentals that I look for. I like to see what the beta is, and I like to see whether it's paying a dividend, whether it's growth or if it's a value-oriented company. Then I like to see what it's ranked at and its book value. Are we above book or are we below book? Now, the Fibonacci on the other side is the technical aspect, but the fundamentals, I have some very specific pieces of information I look for within the fundamental structure to select a stock, if you will, if I'm going to be in it. Because there's some things I want to know. I mean, especially if you're going to hold it, you want to know what the earnings per share is the next 3 years, the next 5 years, the next 10 years. And if they have an NA on it or they don't know, then it might be good for a day trade. Okay, but not something I want to hold on to for a while. But if it has really good earnings per share, then this is a company that a lot of bigger players are also going to be involved with. And for you supply and demand traders out there, you want those big companies with the big volume and the big institutional participation in it, and you want them growing. And so the Fibonacci projections, as far as forecasting out, I have a couple of projections on the S&P that I post on Twitter each day, and I can bring that up if you want.
Sure, if you feel free.
Okay.
So for those that don't know, Jeff has got a ton of work that he's done over the years on Fibonacci. And again, Fibs, I'll say with a disclaimer, it's just a tool. It's not the answer, but many people believe in the value of Fibonacci because of the patterns that kind of form throughout society, through the human being, through the universe just in general. And there's many that believe those patterns tend to form repeatedly in the financial market. So he's got them mapped out here. That's a pretty clear cut. 4,100, huh? Woo!
Yeah, I don't think I've gotten. Yeah, I'll need a couple more dips. The way that I calculate this, just to take just 1 minute here, is you take completed swings, and using a 50 simple moving average as a mean, you take the last 3 swings, okay, that are completed, and you draw your Fibonacci measurements. And I reference Fibonacci as like a measuring tape. It's something to confirm what I see. And as an engineer mindset, as looking at kind of IT, I like specific measurements. And when it hits, it just empowers us a lot more. But I use a specific set of Fibonacci extensions. And on each one of these swings, you'll see that I extend the lines up. Okay, it's not very technical. Okay, I look for where we have multiple Fibonacci lines overlapping, and that becomes more of a confluence area. It looks like I got another one because this low point wasn't here. Let me grab the third one. Minimum 3 swings, and there you go.
Yep.
And you can see where I have 3 lines matching up, and I got another one up here that's just, I probably need to update these. But they've been extraordinarily reliable over the last few months every time we made new highs. Just highlighted one right here. This was the last one. It hit Friday, and then I took that pullback on Sunday night while I was driving back from California. I said, I got to pay for all my gas and my time. So I took the short off of there, and by the time I got home, it paid for my trip. Got to love that.
Yeah.
So just kind of getting an idea, this 4,014 is the next projected level up there. You can come into some of the other classes and things that I do if you want to learn more about how to do that. But it's really quite a simple technique. And it's been extraordinarily reliable in these markets. And you can do it to the downside, too. And that's what I look for in a lot of those swings.
And I've been a fan of them. I'll say this. There's people over the years, and I met a couple, that just make me shake my head and go, you're a complete freaking moron when they use Fibonacci's. Like, for example, Fibonacci arcs is something that was in TradeStation some people are using. And the bottom line is if you're using a Fibonacci arc, price will always hit it at some point. The beauty about what Jeff was drawing here is it doesn't necessarily have to hit those lines, right? It doesn't have to go up, it could go down. So, I don't know, sometimes I think people just grossly misuse those. But there's also this self-fulfilling prophecy aspect to it, which is the more people that use them, the higher probability you're going to see them work. And I see that happening with Fibonacci quite a bit. So I use Fibonacci retracements and extensions are predominantly the two that I use. Naum says, did Jeff predict the S&P at 5,000 in 18 months? I don't think I heard that. Did you? You're not saying 18 months at 5,000, are you?
It was last October I started, in 2019, October, I started talking about forecasting the double of
Mm-hmm.
the index. So that's going to put us close to 5,000. Last October, I think it was right around 2,300, or 2,300, right in that area. So yeah, it's about 46 to 5,000 range. That's where I was looking for the S&P.
Wow, I'm trying to draw it out over here because I'll put a line on 5,000 here for the viewers side.
It's way up there.
Well, I mean, I guess this is the truth of the matter. We are going to hit 5,000 over the course of time. I can pretty much guarantee through the course of history we're going to hit it. I just don't know when. 18 months. I personally would say I put my money on a big no. However, if those things that Jeff mentioned, and also you're hearing more and more about the industry, is if we get back to life as we had it back in, let's call it 2018, post-pandemic, with all that trillions of dollars worth of government and federal stimulus, we could see, I think we could see 5,000, but that's a stretch. I mean, you're 1,000 points away, so you'd have to have another 25% run in this market in 18 months. Definitely doable, but just look at the trajectory I have here. This is the daily going back into 2020. It's a pretty nice sloping line. To get up to that point in the next 18 months, you'd have to have a much steeper trajectory. I don't know. I don't see it, but hey, you know what? I hope you're right.
Well, it would be that. I mean, let me see if I can bring it up just quickly. Sure. Bring up. No, hold on.
Medic says, "Is there air on the moon?" Well, we'll have air there at some points. This is another off-tangent topic, but you look at what's going on with the moon, right, or with Mars. We're talking about populating Mars and colonizing Mars. Wouldn't it make sense to start off on the moon, like to seed, to build all our equipment and huts and all that stuff that we're going to need to survive on the moon? Like, do it right there. I wouldn't mind a weekend trip to the moon, but I don't think you're going to get me on a 7-month trip to Mars. I don't see that working out for me. My claustrophobia. I got to get out of here, man.
It'll put you in a little tube.
Yeah, no thanks. All right, so Jeff's got some drawing going on over here. He's pulling up. This is the weekly of the Dow Jones Industrial Average for those that can't see it.
Yeah, and when we started off like in 1998, and this is the stretch I think we're about ready to get into. Okay, and you can see that these lows are down here. I mean, we had a very significant move up from right here. We had about 6,000, and it went up to just a little over 11,000. Okay, and that was over about a 2-year period. I think we're right around in this area here where we're getting ready to start to see some of this parabolic moves, and they're steep and they climb, and the higher they climb, the more the bears start screaming and come out. You just have to have a plan for both sides. And it's not bad to have a bias, but you have to be ready to take action and not just hold your ground and hold it all the way back down. Okay, you have to manage your risk. And I do think the markets are going higher and buying on the dips. I look for those areas. And for me, until we start taking out some of these pivot lows, sorry, I'm trying to get back my screen here. And until we start taking out some of these major swing lows, the trend is going to still be up to me. And I'm going to still looking to buy the dips. In history, every time we've been in a melt up, the markets have doubled in size. And we also had some very big corrective dips. And anytime the market pulls back 5-10%, I'm bullish again, when the rest of the industry is really kind of bearish, thinking the market's going to really dive down.
All right, I'm with you. I'm a fan. And it's funny, I see both sides of the aisle here. So I have some people saying there's no way that's going to happen. Others saying, yep, I can see it happening, and this is why markets functions, everybody, is we just have the the opinions out there, and bottom line is market's going to do what it's going to do. Let's go to the beginning here. Before we do that, let me ask you, you're doing a signature series starting next week, am I correct?
Starting on the 6th, 7th, and 8th of April, we'll be doing a signature series where I'm going to take you into training the eyes on how to use some of these tools, but more so really to refine these turning points so that you start trusting them. And you have to turn the time frames up and down to get the right picture. And it's not a strategy. Everybody knows the strategy already. It's about building trust in your own research and kind of learning how to put those tools together so you do trust what you're seeing on the price chart and you're not just making things up. And I think that's why people don't trust what they're doing, because they know they're making it up.
Right. And that's just a 3-day course?
It is 3 days. It'll all be online. This one is a little tricky because it's all during the regular trading day. The 6th, 7th, and 8th is right in the middle of the week.
Yeah.
My preference is we do it on Saturday and Sunday because I can get the bulk of the content in, and you're listening to me. You're not trying to trade and listen to me. And so it's going to be a little different environment, which is going to be fun. I get to show live trading a little bit more and how all these things work. And I'm also a very big proponent of, if this works so well, you should be able to take trades in front of me, whether they're simulated or live. That's beyond the point. Does it follow the process, and does it fit the picture? And if it does, that's where you start developing your interest, and you start, is this something that would work for me in the way that I think? And the way that I teach, the way that I put things together with numbers and mathematics is not for everybody.
Yeah.
But a lot of people like that confirmation. And using the left-hand side of the chart, we can do a lot of that confirmation and then bring it all over to the right-hand side of the chart where we can make the reality come to play.
Nice. Oh, I'm a fan. You know, one of the things I love about you over the years is your ability to bring numbers and everything. And, you know, everybody has an opinion. I love what Brendan just said here. He says, that is super key for everything. Trust your own research. And it's not just trust your own research, but make sure you dig deep enough and don't fall victim to a lot of people make the mistake of, when they research something, to formulate an opinion, and then they'll just research what supports that opinion, right? You need to look at things from both sides and say, okay, I think it's going to do this, and my information says it's going to do that, but how can I poke holes in that theory, right? Are there things that I'm missing? And you might find that all of a sudden you look up some more data and you're going, oh, well, wait a minute. I'm no longer bullish on this position, which I was adamantly bullish about 6 months ago. It's changed because of these factors. So yes, trust your analysis, but make sure you look at things objectively. Worst thing you can do is listen to somebody else. I hate to say that because, you know, we're in the industry of talking about financial markets, but I have seen in the past where people drink someone else's Kool-Aid and then it turns into a mass financial suicide. Horrible analogies out there today. Guys, if you want to know or take the class with Jeff Manson, you're going to have to go to Online Trading Academy's website for that one. Talk to your enrollment specialist about that, and they'll get you all the information that you need to know. Now, I had questions here. I love the graphic I built for today. This is a good one. I tried to put Jeff's face in the visor here, so it looks like he's driving his spaceship around the moon. But I'll go to the next question. Naum says, I can't wait for Neo, Apria, and Tilray to take off beyond the moon, maybe Mars. He says, I keep adding every 3 days on the dip. All right, that's a pretty big addition here. Let's break them down one by one. And all right, Naum, don't get testy if we're not positive on these ones. It's just straight price charts talking, okay? So let's start off, Jeff. You can share your screen if you want, or I can drive. We'll look at Neo to begin with, the darling car company out of China. Not so darling lately, down about 50%. What's your take on Neo?
Well, I'll bring up my screen and kind of show you what I'm looking at, just to kind of give you the idea. Okay, so here I have Neo on a daily chart, and I have the areas of interest of where I'm looking to see where price will bounce up. And I've got 28.12, 25, 21.18, 18.70. All of these fit the criteria of what I've been looking for in training the eyes. A little base, strong move out, and then we have leftover orders. Now, the nice thing about Neo is I do believe long term you're going to be good. Okay? Neo needed to raise this much capital, and they raised it to spend it. What are they spending it on? Well, they're spending it on their own infrastructure. They're spending it on new equipment. There's the manufacturing and so on. Okay, so this drop right here, if you go into some of the fundamental side, is what are they spending it on, and is it still okay? Is the when you go out to the research, are they still projected? Right now, there's no earnings per share projected. Okay, but it's still relatively new company, and we don't even know how this matches up with the index. So there's some missing parts here as far as the fundamental side. But I would look at the company's website and find out what they're spending money on. Are they buying new buildings? Do they got to buy land? Do they have to, what's their timeline? Because buying every 3 days, if you have really deep pockets, you'll do great. Okay.
Maybe. I mean, you're dealing with a speculative company too, right? I mean, Tesla had no earnings for a long time, and all of a sudden they are, the kingpin. But you don't know. This one could go the way of Nikola and just keep drifting down and down and down. I mean, so to me, that's really dangerous to just arbitrarily say I'm going to be buying and adding to this every 3 days now. That to me is pretty dangerous. That's a dollar cost averaging strategy that. There's a phrase for that. It says the markets can remain irrational longer than you can remain solvent. And if it keeps drifting down, let's say NEO goes all the way down to $12, where he's got that lowest demand zone. Are you going to be solvent? Will you be margined out by then? I mean, that's the risk you take by just blindly averaging in.
And we talked earlier that you could be writing cover calls on this and using some options to generate some income. And if you really think, you want to add on down here at 28 or 25, then sell the puts. Let somebody assign it to you and collect a little bit more of that premium. That might be a different strategy for you to entertain to generate that income and buy where you anticipate. That we've had some good moves up, some good volatility. I would also check the short interest on it and see where those things are at as well. I do like NEO. I mean, it made me some good money, and I just never got back in after I went from, I think, $12 up to 21. and then I stepped aside saying, okay, I'm going to wait for a pullback. And
to the moon.
It's coming now.
Well, unfortunately, that's just the challenge of it. I'm looking at the chart right now. We talked about this one yesterday. You can make the argument right now you're kind of a double bottom formation, and not yesterday, we talked about it on Friday, I believe. And I would be okay taking a chance at it, but remember, the overwhelming pressure right now for NEO is to the south side. Put your opinions away about how great the company is or what it is. Right now, for whatever reason, it's selling off and it's looking fairly weak. So I actually do like your $25 level out there on NEO. I think that they've got a great potential to make it big. There's a lot of competition coming up in that space. Certainly Warren Buffett's car company, or the one he's invested in, I am definitely a big fan of as well. But this out of the three, I don't like it for two reasons. Number one, it's predominantly weak, and it was one of those ones that just ran up too far too quick. I do like the double bottom situation right now, and I do like that lower demand level at 25. There we go. Yes, Tracy says, NEO, Chinese, no thanks. Yeah, unfortunately, that's what it is for now, Tracy, until maybe they start to set up factory here in the United States. But yes, it's Chinese. All right, we're going to go to the next one. Let's go to APHA, Jeff. You ready for that?
Alpha Tom Henry Alpha, right?
Yep, Apria. This is another one of those, and all three of these have been darling stocks for the past year, and just blown up and really had some nice gains. So there's APHA. And by the way, I just want to know that the blue lines that you have, that's like an analysis of where this thinks it's going to go.
Well, this is a software that the cyan colors.
Yeah.
Yes. Yeah, that's I don't know if you remember back in the day, a gentleman named Wells Wilder.
Yeah.
Okay, well, Wells Wilder produced a forecasting technique called Adams reflection, and he wrote about it, and you can get a book on it to see it. My mentor is the one that's behind this software and the colors. There's 32 different indicators on here. It's more of a trend following software and algorithms. But Wells Wilder is responsible for those cyan color lines, and they are forecasting the direction. Okay. There's 8 bars, right, 8 days. to the right side, forecasting out. The first 5 have about an 87% accuracy on them. And this is some things that I've been using over the years to help me do what we have market analytics. And like I would come up here and I'd find everything that has what we call a level 5, which is the market trend, main trend, mid trend, trend strength, and price action all going in our favor. Something like CC, this would be one that would be something I would be looking at to post as far as the stock picks. And I'd kind of use that setup bar, and then I would enter right at the top of that setup bar, or right at the top of this candle the next day. We had what we have yesterday, CHD was, and all of these are picks that I put out there on my other site where we had an entry at 86.14. Okay, we use the low of the setup bar as a stop, and it's now we're trailing it up based on the little painted stops, like a parabolic stop. And for me, this was a little difficult to get back into because it's all trend following when I've been so used to reversal. Like supply and demand, you're anticipating. Here, you're using all the indicators and basically crowd psychology to stay with this trade. But once we have all of these one color, whether they're red or whether they're blue, they kind of come into that trending environment, and you kind of, that's one thing I always struggled with because I'm primarily day trading is, how do I stay with the trend? What are some additional odds enhancers or something, decision support tools I can keep to stay with that? And also understanding that the crowd would still be behind it. And I can use other areas like up here to find opposing supply zones where I could also project about where those 5 candles would come into play, that I would see that price kind of stalling out.
It threw me off. Go back to APHA because I was looking at your charts and I'm like, I must have the wrong day. You freaked me out because I'm looking at it going, wait a minute, I'm showing it at 16.95 and you've got it all the way down here sub 15. Do I have the wrong data? So yeah, I just wanted to clarify that because I think some people might look at this chart and go, well, wait a minute, it's already down at 15 and freaking out.
Yeah, this one looks like it's relatively new, so I don't have a lot of information as far as demand. Price is getting back down to the area, looks like where it started, a pharmaceutical company. These ones can be tricky. Event over time, they can pay out to be pretty good.
No, go APHA. Alpha Philip, I don't know what you get the wrong ticker
Alpha
symbol.
Tom.
Yeah, Alpha P, APHA.
AP. All else fails. Right, get the right ticker symbol.
Yeah, you're still got different prices in mind because you had it there. You go.
Yeah,
there we go. So that's APHA. And it's funny. I was just looking at the prices, going, man, he's got totally different numbers. But now I get it. That's why I wanted to clarify that because I'm sure some viewers probably looked at it and said, wait a minute, my chart doesn't show like that. So there you go. It's anticipated move.
It's just Jeff's bad hearing. The first area I would start looking for a demand zone would be somewhere right around this area. See where price rallied, based, and rallied from this point. If price can hold that range right in here at 12.70, 12.87, 11.93, $12 range, that would be a great place. Okay, These little tails up here, to me, they point that that this thing could be going higher, but it takes a while to digest whatever this did. Okay, kind of an exhausted move. The zone down a little bit lower, I would be looking for about the 757, 646, and this is where you would take a moment or two and could kind of dive into the fundamentals, see what the company's using their capital for. Okay, are they making money and just had to borrow money from their stock to build another facility? Those are positive things, but it's just like anybody else's checking account. When you spend money to make money, the bank account goes down.
Right. Well, and looking at this chart here, I'll look at. You can keep that up there. I'm just going to show my screen because I don't have those little extra blue bars that are showing. But you look at it right now. I still feel like we're in the splash wave is like what I call it, where you have the big, gigantic cannonball, and there's still all these crazy waves from that initial impact. I look at Afria right now, and that $12 mark to me is where I'd be looking to buy it. I know it's still significantly lower than current price, but between 12 and 12.50 looks like the area. And why? It's because you had this accelerated move up, and then it traversed sideways. It held it, right? It really kind of towed its ground there and went down to a low right around 11.89, somewhere in that ballpark. But we held sideways here. That's strong, and then all of a sudden you have the next leg up. So that, to me, obviously says there's tremendous interest in this thing, but the waves, the splash we're seeing right now is just big chop. I don't know. I don't see any real clear direction at this point, so I would probably just wait and look to buy it at a much lower price. And if I miss it, then, oh well, I missed it. But that's my attitude towards these ones, is I don't really care if I miss something. I know that there's going to be something else for me the next day or next week or next month. Let's do one more, which was TLRY. Old Tilray. TLRY. All right, so there's your Tilray stock. And guys, this looks almost identical to Afria. I mean, it's pretty much the same thing chart-wise. And you look at the current trend for the past 2 weeks, it's been just drifting down, looking weaker. My guess is you'll probably see it come down to that $18 mark here on Tilray. And let me see what Jeff's drawing over there. It's like battle of the crayons. We're both drawn on our screen. So there's what Jeff's got. And you're pretty much same spot as me.
Yeah, see, when I'm looking for supply and demand, we're always looking for the origin of a strong move. And often price will base sideways, like resistance or supply coming in 3 or 4 times and then all of a sudden blasting right through it. Well, the origin of that move, the blast off, is generally where we look for those demand zones. And so the little flat areas or resistance, I just look slightly below them. That's part of what I cover in training the eyes, is finding those areas on the price chart, being able to see those price patterns. Whereas if we were to take the same one, TLRY, and we bring this out to a daily chart as well, I would be using that same area, but I would refine it down to a very specific group of candles where I could isolate the distal and proximal lines on that.
Yeah, and so for those that are looking at Tilray, if you're not buying right now, I would hold off for that much lower level, but because you could argue there's a double bottom there as well. Jeff, I don't know if you followed the news today. You had Viacom. This is one that a lot of people have been asking about. It's been a crazy couple of days for them for sure. VIACP is the one that I'm looking at here. This is the Viacom CBS, but there's a bunch of other ones. For the viewers that don't know what happened, there obviously has been a bunch of talk about these companies, the sell-off that's happened. I'm trying to zoom out a little bit so you guys can see better on my screen. Bottom line is you had a company that was very long in Viacom, and they were over leveraged. So as this thing starts to fall, they receive margin calls, and because they receive those margin calls so quickly, because in a 4-day window this thing went from $100 down to, let's say, $65, that triggered margin calls, which forced them to sell even faster. So what you ended up with was this onslaught of selling, and it may not be done, folks. It may not be done. This has happened quite a lot over the years. My favorite one ever was on a company called Chesapeake Energy, where Aubrey McClendon, if you ever want to see the craziest story ever, Aubrey McClendon was the CEO of Chesapeake Energy. And he was basically buying all of his own company's shares and kept driving it up and 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 up. And he basically, what happened is it had a big sharp drop in it a couple days. He received margin calls to the tunes of tens of millions of dollars of shares, and then they liquidated him. They force liquidated him, which means your broker will automatically sell your shares whether you want to keep them or not. They're going, nope, you got too much risk. Those shares plummeted straight down. Let's see if I don't even know if it'll show up on my chart anymore. Let's go CHK. I'm going to have to do it on a monthly basis. And no, it's not going to show it to me. Bummer. I don't think it'll allow me to go back any further than this. Yep. No, I'm not getting. I don't know whether they redid their list or am I just not getting data, because it seems like something's wrong on my end. But Chesapeake Energy is probably the greatest example of that. What's your take on handling something like Viacom that you know is getting hit by the industry right now? You know that you have margin calls force liquidating some very large holders, and I think that Viacom is another one. VIACP is the Viacom CBS version, but I can bring up VIAC.
I just brought up VIAC. Yeah. I'm looking like that $35.99, $34.20 range. That looks like where the origin of that last move up was. But we'd have to look a little bit more behind the scenes and see what the sudden drop is. All that liquidity, because the drops are so strong, it looks like the absence of buyers.
Yeah.
And now it looks like a lot of buyers are trapped and they're frozen. But I like that 36 by 34 range there on the daily chart.
I mean, if you like Viacom, basically Viacom is not going out of business. I can never say that definitively, but I don't think they're going out of business. I get scared of stocks like this, and I'll be honest. I don't like buying companies that have a chart like this. What you could be doing is you could go out there and you could sell some puts at that price level that Jeff was just mentioning, between 34 and let's say 36. You could sell some puts out there and maybe, collect some premium, because right now the premium is going to be really, really high on these put options. So I personally would shy away from it. I just think it's a little too risky for me. I'd rather have something that's somewhat predictable and has nice trends versus literally catching that falling knife. And this chart is a pretty ugly one out there. And it's not just this one. It is exactly. It had a huge run up and then a huge crash back down. This is the perfect illustration of the elevator up, the stairs up and the elevator down. I mean, it just basically gave up the ghost. Yes.
Remember Ryan Watkins when he was on the ski lift and he was doing the sumo thing?
Yep.
This is a sumo going off the ski lift. Yeah.
Well, and again, this is just different people's risk tolerances. Jeff would probably be okay with that. I would be a little cautious just because, when you have something that's moving $15, $20 per day and it's $1,000 stock, that's not that big of a deal. But you're talking something that's, double-digit stock, moving double digits per day. Your beta, your ATR is off the charts on this thing. It's a little bit dangerous trying to pinpoint an entry. So it's got to be something that you're okay holding for the long term. Certainly, I think long term, yeah, why not? You take a stab at it. It's been hot. Did the company just fall apart? No, I think a lot of this was people pushing it up and buying and chasing it up by using leverage. And all of a sudden, they're getting margin called and comes crashing back down.
Yeah, the book value is about $24.91. And this is still a growth-oriented company on the NASDAQ. So you could figure at best 2 times book on the low end. On the high end, for a growth company, it'd be about 4 times book. So we're getting down there to where we're right about 2 times that book value, where soon, by using the fundamental side of this and understanding the book value, is that somebody's going to have to come out and recommend this, is that this thing is undervalued. And it's really undervalued by almost $25 at this point. Certainly undervalued. Value, not based on chart.
I get you, and I think that's where when you see something like that does create that great opportunity. You're going, wait, based off the fundamentals that I have, it's valued much higher. Therefore, buying at this price is good for the long run, but that's not my style, so I don't trade that way, unfortunately. All right, I've already got you past your time. I know you're probably cursing me because I know you always got a million things going on, so you got stuff to do. Any other classes you're teaching other than your signature series, which is going to start next week?
Just the signature series. I still do the XLTs and trade live and with the students from Online Trading Academy. I'm also do some live trading, and I produce some stock picks on a company called TickerTalker.com, which is getting some traction. It's starting to grow pretty good over there, so I'm enjoying it. There's basically stock picks that I post out there, and then just do some live trading. I do it very casual, but it has a lot of good content.
Good, awesome. Well, Jeff, hey, thanks for coming on. I have a feeling, I'm curious to see in another 30 days when we do our monthly visit with you, where we'll be at with regards to that bull market. Maybe things will continue on. Maybe they'll change. Who knows? But right now, Mr. Manson has a very bullish outlook on our markets going forward. So position yourselves accordingly. Have your own plan out there, guys, and make sure that you have a stop loss in place just in case we're proven wrong. Jeff, thanks so much for coming on. I appreciate it, and I look forward to talking to you soon.
Thanks again, Merlin.
Right,
have a good day.
Guys, that was Jeff Manson. You can find him teaching all over the place, really. He mentioned he's doing XLTs for Online Trading Academy. He's got some stock picks at Ticker Talker. He is also doing a signature series for Online Trading Academy. You can find out more information by going to tradingacademy.com to get all that pertinent information there. All right, let me get through the economic announcements and stuff like that just because I got to do it. There's really only a couple important things for tomorrow, for Tuesday session, and most of it is U.S. You've got consumer confidence numbers, which is no big deal. You also have HPI data tomorrow and the Case-Shiller Composite 20 Home Price Index. That's pretty much the big stuff. If you're trading the pound, you do have the British GDP numbers coming out tomorrow, which of course could be pretty important. Now today, there really wasn't anything noteworthy for the U.S. markets with regards to economic announcements or earnings, really. Now tomorrow, from an earnings perspective, we do have Lululemon reporting tomorrow. I know that's going to get a lot of people excited. I see how them yoga pants are doing while everyone's stuck at home on quarantine. But Lululemon reporting earnings tomorrow, and also BlackBerry, BB, comes out with earnings. I'm pretty sure, let me check real quick. BB, I believe, is the ticker symbol, because they changed it so many times. Yeah, BlackBerry reporting earnings tomorrow. It's not like it's that important. I mean, if you look at the price chart here of BlackBerry, would you really want to trade this one? I mean, yes, it's bounced between 9 and 12, but it looks pretty boring. It looks like just drifting down even lower. So, BlackBerry is about as exciting as their phones ever were. Not that exciting. But they're reporting earnings tomorrow. Now, Lulu is a different bad boy. Here, let's go Lululemon here real quick just to check out that price chart. It has had some serious fluctuations. I'll zoom out here so you guys can see Lululemon, especially bottoming out due to the COVID part where everyone's, I guess, working out from home. Who works out with clothes on anyway? Aren't we supposed to, if you're home and you need clothes on, it's a totally different workout. But here you can see Lululemon going from about 140 all the way up to over 380, almost $400 per share, drifting back down a little bit here. So it not looking great now. I mean, really just looks like chop for the better part of the past month, but we'll see how their earnings comes out. Yes, Lululemon and Gymshark, right? Love them. All right, Dr. Bonnie, it's Ticker Talker, Tocker. I think it's a website. I'm not exactly sure, but maybe we could have visited that one today. Last one, TSLA. Since I have a gentleman asking for Ticker Talker, and let's see, that was for Bobby. What about buying Tesla's dips? Thoughts? Personally, this is the same situation that I looked at earlier with a couple other charts. Right now, it seems like sentiment is dipping out of Tesla a little bit. You had, ARK trying to pump it up with their recommendations, and Kathy Wood basically saying, "Oh, this thing's going to 3,000." That was a tactic to get things to pump up. My guess is you'll see this thing break these lows. It just feels like it's just the enthusiasm of the split, the enthusiasm of being added to the S&P 500. That is all done, and what's next, right? An amazing earnings announcement, that would probably do it. Something big needs to come out to get the fuel back underneath this one. I'm not that optimistic on it. I mean, I think our decision point comes when you get down to that 540 mark on Tesla. If you get down below 540, then I think you're going to see that gap fill and it goes sub 400. But that's just me looking at price charts, nothing to do with the fundamentals, the economics, nothing about Tesla. It's just saying this chart's representing emotion. It's representing people's collective euphoria or disdain for something. And right now, it doesn't look like they're that excited, right? The moves up haven't been that great. A lot more red candles over the past 2 months than we've seen green candles. So that will continue until something proves me wrong with regards to Tesla. Rajesh says 420 is a more logical number. Yes, given Elon Musk's propensity to cannabis, we might look for 420, which would be right in the middle of the gap. We'll shoot for 420, all right? I like that one. That's good. Tiger Barry's with us today? What are you doing? Don't you have a bowling tournament to go to? Come on, Munson. Good to have you with me, friend. I don't think I've ever actually seen you on this show, so good to see you on here, Tiger. Hope you're doing good. Let's see, what else? There was a couple questions came in earlier, so bear with me. Vasily says, how to avoid the wash sales when trading? You get yourself declared as a trader. So there's specific things you have to declare trader status. I myself have trader status, so I don't worry about wash sale rules. But if you don't have wash sale rule and you're just a regular trader and not trader status, you can't get around it. So find ways to get yourself declared as a trader. It's about activity. It's about frequency. Those things are critical, but that's more of a tax consultant question. I'm not a tax pro, but I am declared a trader, so there you go. No, bowling tournament this Saturday, huh? Good. Hope you get your 300. This guy, he's nailing on the ball. I hit a 195 once, and I thought I was king of the world. And then Tiger posts his bowling scores on his Facebook page, and I'm like, man, you just made me want to stop bowling. I can't compete with that. All right, let me go through. I'll do one more, and then I gotta get out of here. QS. A good question, Rajesh. I'll go through. I need to get the charts for those to help explain that one better. There's differences in them, long-term versus short-term VIX. But here is the QuantumScape Corp. All right, here's your chart for QS. Clearly, I'm not a fan just because it's trending sideways. But what I love about this, and this might be the most sexy chart of the day, so CG, thanks for bringing this one up, is I've mentioned before, one of the best trading setups visually on a chart is when something has a wide defined range. And look at the range on this bad boy. I'll draw a yellow box around it. This is gorgeous. I mean, these are not small numbers, and they're ballparked here, but we'll just do it to the most recent peaks. Let's shrink this box down just a bit. But I'm looking at high, most recent about 65, and the low seems to be bouncing off of 41. That's a $24 price range that is just bouncing back and forth between those. At this point, I don't really, care too much for the company, but if I was looking at QS, you could be selling puts at this level, buying some calls, and playing that range, or buying shares outright. I like the leverage that options give you, but that's pretty much it. Not a huge fan of QuantumScape. I don't know what they're purchasing. My guess is by looking at this is a SPAC, so I'm not sure who they're purchasing. But I love ranges like this. They're perfect. If you can, find these ones, these are the diamond, the goose that lays the golden egg, but make sure you use your stops, because if you buy it at 40, right, let's say right now you're at 42.40 and that lower level is 40, then make sure you use your stop loss, because it could drop all the way back down to 20 in no time the way this thing's been moving. All right. Good one, Brendan. You're on fire today. Have you been hitting the medicinal a little bit, Brendan? All right, cool. That's going to do it for me. I got a bunch of stuff I got to take care of, and I'm doing my best to keep these shows under 1 hour. So anyway, I hope you guys enjoyed that one. Now, tomorrow, we're going to do all Forex. Lots of charts. We'll talk about the international currency markets. You guys might know the Texas trader Walker Englund will be our guest on tomorrow's show. We'll be talking about, as you know it, all things Forex. He has a ton of free educational resources that you guys can check out on his Facebook page, Walker Texas Trader. But he'll be our guest tomorrow. If there's a specific pair, something you want to know about international currencies, trading different spreads, crosses, whatever you want to know, send me those questions. You can send those in at TraderMerlin@gmail.com, which you can see on your screen right now. Or you can just put them down below the comment section on the YouTube video. That always helps me out. I see we've got quite a few new people out there today. So those who are new, do me a favor, click the subscribe button. Of course, if you like the show, click the thumbs up. And because Big Eb asked, what about VIHAW? Let's look at it. All right, oops. So basically, VIH it's been on a tailspin here last week or so, looking ugly. This makes me a little nervous that maybe this deal is going to fall through. That would not be good. I mean, at this point, I'm down to almost $4 per share. Well, a little over $3 per share, which is not good. But what about them? I'm still holding. I'm not adding more to VIH. It's funny because I had an order to buy 2,000 VIHAW, but it filled me for a small portion of it. So I will probably look at this tomorrow and see. I may actually round out that 2,000 shares of VIHAW. Now, the danger here is, and I haven't followed it close enough, the danger is that they do not go through with the deal with BAKKT. Then I'm just fundamentally screwed, because this will just continue to drop and go right back down to its $1 or lower on the VIHAW, and VIH will drop very quickly down to its $10 IPO price. So to me, there's a bit of risk here. It's not looking real good for VIH. I don't know what the story is, but the way that it's moved for 2 out of the last 4 days makes me nervous that the deal may go through. Yes, if the deal goes through, then I agree with Brendan. If that deal goes through, this thing's going to be off to the races. It's going to be a hell of a company to own. But that is a little bit concerning, seeing it drop so quickly from, it was up at 15, 16 bucks. It was up in the 20s here back in February, but now it's really starting to show some weakness. So a little bit nervous. Just for the 60-minute show, Oh, yeah, see? Nope, not going to fall for it. If you try to get me to go another 4 minutes on that one. You guys are hilarious. No, but I'm still in that one. I'll continue to hold it until whatever happens. I didn't go too heavily. I only have 1,000 shares, then I have some of the warrants, but I'll probably buy some more warrants tomorrow if it continues to drop like that. It was a pretty ugly day out there for VHAW, down about 6.5%. Cool. All right, that's going to do it for me. Again, if you guys would like to send in questions, again, do that at TraderMerlin.com or just email me at TraderMerlin@gmail.com. Walker Anglin will be our guest tomorrow from Texas talking about the currency markets. Hope you guys have a fantastic day out there. I know we got so much other stuff I could have talked about. Yes, ARK has a space fund coming out tomorrow. Maybe I'll touch on that on tomorrow's show as well. Cool. Thanks, everybody. I'll see you tomorrow with Walker Anglin.